All right, well, good afternoon, and thank you, everybody, for coming out today. I'd like to begin by introducing Denise Hanrahan, my Deputy Minister for the Department of Finance, who's joining me today as well. The Fall Fiscal Update provides a snapshot of our current fiscal situation at the midway point of this current fiscal year. It's an opportunity to examine how we're tracking against the projections we made in Budget 2018. It also provides insight into our course for Budget 2019. We've come through a very difficult period over the past 3 years, probably the most difficult since the 1930s in this province. There's been plenty of ink spilled on the mess that we as a government have inherited by the mismanagement of the former administration. The single biggest challenge that we face as a province remains the Muskrat Falls project. It is the single largest contingent liability on the province, and it is responsible for more than 30% of the province's direct debt. Our bond rating agencies tell us that our province's plan is a solid one. They're happy with the direction government is taking. But they also point to the fact that Muskrat Falls is the downward pressure on our ratings. Nobody liked the taxes that we were forced to put in place in 2016, both politically and as a citizen of this province. I didn't like what had to be done, but it had to be done to get us back on track. Since 2016, we have made a commitment to alleviate pressure on the residents and businesses as we were able to do so, while still maintaining our focus on turning this situation around. We promised a balanced approach, and in fact, the very first day that I became Minister of Finance, I said that I would be absolutely committed to having a balanced approach in this province. That is an approach that is supported by the Premier, by our Cabinet and our caucus. With that balanced approach, we are continuing to reduce the deficit. We are continuing to provide the services that are important to the people of Newfoundland and Labrador. We are diversifying the economy. And as we can afford, we will continue to reduce the tax burden on the people of this province. In 2017, we reduced the deficit significantly, the result of strong fiscal management while investing in priority areas. In Budget 2018, our continued dedication to a balanced fiscal approach kept us on track, allowing us to maintain service delivery while supporting economic growth. In this budget and since, our focus has been on building for our future. I've said in recent months that while we have not yet turned the corner, it is clearly in sight. The result of today's update support this. Today, we are revising our projected deficit from 2018-19 at $547 million. That is an improvement of $136 million. This is a result of increased revenues of $130 million and a decrease in expenses of $6 million. This represents an improvement of over $2 billion from what we faced in 2016 without the immediate action that we had taken. The primary driver of improved revenue is higher than expected oil prices. As well, the Canadian-US exchange rate is more favorable than was expected as well. I will say that we did have a reduction in production of oil, which had some mitigating effect on the upward price of a barrel of oil. As I've said many times this year, we have been abundantly prudent in our oil forecasting. In fact, that was the message from one of our bond rating agencies. They used that to describe our approach when they met with us this year, that we were abundantly prudent. This chart shows how oil has performed compared with the budget forecast. At no point this year has the price of oil been lower than our budget forecast. As a result of current trends, we are revising the oil price forecast to $74. We are also revising the Canadian-US exchange rate to 77 cents. We remain prudent with our forecasts and base them on concrete data, recognizing the inherent volatility of oil prices. I've spoken before about the poor planning of the former administration in relying solely on oil without working to diversify our economy. We as a government, our Premier, our Cabinet and our caucus have been sowing the seeds of economic diversification, and we are starting to see the fruits of our labor. Today, oil makes up approximately 15% of our forecasted revenues, compared with approximately 32% in 2010-2011. This government has been working diligently to reduce that reliance and to diversify the economy through investments in infrastructure, businesses, and high upside industry development. Work that we will continue. We cannot and we will not revert back to solely reliant on oil revenue. At the same time, we will not take this additional revenue for granted. We will ensure that this money helps reduce the debt of the province and the burden on the people of the province. We as a government will not allow this windfall to burn a hole in our pockets, as we've seen with the previous administration. In that regard, one important offshoot of these improved revenues is a reduced borrowing requirement for this year. Our borrowing needs for 2018-2019 are now projected at $1.25 billion, which is a decrease of $200 million from the budget projection. Net debt will also decrease by $157 million below the budget projection. The number is obviously still higher than any of us in the province would like to see, but this is why we have to remain focused on our plan to return to surplus by 2022-23. Looking at the economic indicators, we are seeing improvements in the areas that people will feel in their everyday lives. The expectation for several economic indicators, including employment, capital investment, housing starts, have all improved since budget time, while the expectation for GDP and consumer spending has been slower to catch up. Employment is now expected to remain flat as opposed to a 1% decline projected at budget time. This is due to the inclusion of 8 months of 2018 historical data into the forecast. Employment growth has been strong in recent months. We've seen over the past 4 months improved employment numbers in this province. I would like to highlight some of these areas. After declining in the first half of the year, both the change in employment and the change in retail sales are showing growth in recent months. These are positive signs for our economy. Employment and participation in the workplace are both improved this calendar year from budget year. Additionally, unemployment forecast is down from 2017. Our government, guided by the way forward, has put a focus on job creation. We are working with industry to create new opportunities across the economy, including aquaculture, agriculture, oil and gas, advanced technology, tourism, and mining. Again, these are just some of the sectors where companies are expanding and new jobs are being created. The most recent peak in unemployment happened last year when it reached 14.8%. That rate is now declining. We have seen growth since 2009 in this area, but that growth tapered off under recent challenges we faced. In the first 6 months of this year, retail sales remained sluggish, but over the past 3 months, we've seen a turnaround in retail sales. Going forward, we are predicting renewed growth in retail sales as we head towards 2022. Another key indicator of prosperity in an economy is the average household income. We expect average household income to trend upwards in line with wage gains in the economy between now and 2022. We as a government have made it very clear Newfoundland and Labrador is open for business. We have worked with large multinational corporations such as Vale, Husky, Equinor, and others to advance major resource-based projects that will create significant jobs and attract more than $16 billion in new investments in our province. This is also creating new opportunities for local businesses and new jobs in the service supply industries. Industry sees the quality of our workforce, the wealth of our natural resources, a world-class post-secondary system, and well-developed infrastructure as strengths. They want to work with us to set up or expand their presence in our province. Between 2011 and 2016, we saw major project investment booms. Capital investment dropped in 2017 and 2018 as Long Harbour and Hebron projects wrapped up. This is the normal course as mega projects such as those wrap up. But we are expecting capital spending to ramp up again as development begins on West White Rose and the Voisey's Bay Underground Mine. We also have Bay du Nord, as well as many positive prospects in oil and gas and mining. As released last week as part of the Way Forward on mining, we expect 5 new mines by 2030. And we currently have 85 exploration wells registered with the province, many of those already registered with the Canadian Environmental Assessment Agency in our offshore, with a value of $2.9 billion registered with this province. We as a government have done significant seismic work and geoscience work. We have gone to the world oil industry, and we have 7 new players in this province today as a result. By 2022-23, our capital investment should be nearly twice as strong as it was in 2009-2010. In closing, this fiscal update shows that our balanced approach is working and is keeping us on track with the plan we put forward. Our balanced approach has not always been as quick as some would like to see, but I think this update shows that it is effective. We needed to act as responsible stewards of the public purse, something that was lacking in this province for years. Our dual focus continues to be on reducing the burden on the people of this province while staying on track to return to surplus. This is the foundation of our balanced approach. This update shows the continuation of a trend that we have seen each year since 2016, that we continue to reduce the annual deficit and that we are inching closer each year to a balanced budget. My promise, which I know is echoed by the Premier of our province, by our Cabinet, and our caucus, The promise that I made when I first became Minister of Finance is that I am unwavering in my commitment to get us around the corner. I am excited by what I see in these results, as it shows that our efforts as a government over the past 3 years are starting to bear fruit.